Hey, good morning. Let's go over today's trade plan. So in the overnight session, our main idea was that ES was likely to rotate back up towards 67.75 to 70.75, which was resistance in the overnight session, and that was a spot where we could get some rotation, and ES ended up hitting 1970, rotating back down, and then broke out to the upside to a new overnight high on the positive GDP number. So at this point, the next main catalyst is the FOMC announcement this afternoon, and we know that so far ES is very much stuck in a range and simply balancing within a range. So for the first part of the day, heading into FOMC, we're expecting just continued balance. We know that in the overnight session, buyers have stepped in, so we could see a move up to 75 quarter to 76 quarter and potentially 77.5 to 79.5, even heading into FOMC. And then after that, we can get some directional movement, and that could be to the upside or to the downside. Now, if it's a downside move, likely ES will still remain stuck in a range. The buyers have been pretty resilient. This market has been pretty resilient, and we're basically balancing in this, 1959 up to the 1983 to 85 range, right? So this is a very defined range that we're in right now, and the FOMC announcement could trigger a break to the upside if we're trading up near the top of balance, and the reaction to the FOMC announcement is positive, then we could actually get a move up to 81.75 to 83.75, the all-time high, and then depending on how much momentum and volume we have in real time, there's a chance that we could even go higher, but that's something that'll need to be gauged in real time after the FOMC announcement. Heading into it, most likely the market will continue to balance within a range. So on the downside, we're going to use 66 to 68 as the bull bear zone, and at this point, if that buy side conviction, or if we're going to continue to see the buyers be more dominant, then we want to see ES holding above 66 to 68. So we don't want to see that breakout on the GDP number actually get erased. And ideally, it holds even above 69.75 and then rotates higher, tests 75 quarter to 76 quarter, which is a good spot to take profit ahead of the FOMC announcement. And 77.5 to 79.5 is a spot where it could actually cap the upside heading into FOMC, and then afterwards, we'll look for a directional type move. On the downside, like I said, 59 is the short-term balance low, so this 58 to 60 zone is very key, and even in the event of a downside move on FOMC, as long as 58 to 60 holds, we could continue to simply balance within this range. A breakdown below 58 would indicate sellers in control, and then this 51 to 53 half zone would come into play, and potentially 48 half and 43 to 45. But right now, that's not the anticipated scenario. Right now, as long as we hold above this bull bear zone, buy side can definitely have more conviction. And then if we break below it, it doesn't necessarily mean that sellers are in control. It just means that now we're in more of a neutral market, and we're just stuck in a range. Buyers can still be active at the gap fill, 62 to 64, and 58 to 60. So right now, very balanced, very two-sided, but the buyers have been stepping in on pretty much every pullback over the last couple of weeks, and if that theme continues, then we should see the market holding above the bull bear zone today, or holding above 62 to 64. So we will look for long setups on the first pullbacks into any of those zones. And like I said, ideally, the market holds above 69.75 and doesn't even put in a deep retracement. Getting too deep of a pullback would actually be a sign of weakness short term. So ideally, you don't really want to see much of a pullback. You just want to see the market kind of just continue higher from here up to 75 quarter, 76 quarter. That's a short-term inflection point where sellers can step in, and depending on how things are looking real time, there could even be a short setup at pre-market resistance or initial resistance this morning ahead of FOMC. And then, on the FOMC announcement, we actually get some directional movement. So typically, the market will be very range bound heading into FOMC, and that's why you do want to be just aware of that, because usually there's not that wide of a range, and it's very two-sided. So, that means that as the market heads up into pre-market resistance or initial resistance, it's more likely that, that's going to be the end of the short-term upside move. And then we can just balance heading into the announcement, and then, depending on where we're trading in relation to 69.75, I think that'll help us figure out which way this could potentially go. By default, the bias is going to be short-term bullish, but of course, if we get a downside move and we start breaking below the bull-bear zone, then that would tell us that this market is short-term weak, and we could head down to the short-term balance lows at 58 to 60, and then perhaps get some buyers over there. So right now, that's how the market is shaping up. Overall, we're in this very defined balance, and we'll see if there's enough momentum to get a break outside of the balance. But if there isn't, then we could just remain stuck in this range for now. So those are the main ideas heading into the open. Let's see how well the buyers can hold it up short term here, and then just wait for the Fed announcement and take it from there.